Okay, so there's a couple of like miscellaneous topics that the chapter has us go over. One item is continuing versus discontinued operations. So they're as businesses are, they're constantly changing. They have many different business lines, and sometimes the business will either sell part of its business, some segment, or it will just shut it down. And so if you're not told that, then you can get mislead, like you could be misled by the kind of the financial performance, because if one quarter you have this existing segment and then it's gone in the next quarter, there will be a big drop potentially in the profit or the revenue. So what a company will do is break out any of the income attributable to discontinued operations. So you can see here, this is for 3M. They basically go through the whole thing. So this is from continuing operations. So what they're going to do, actually, this is a good and transparent way of doing it. What they do is they take only the things that are still going to be in existence. They provide the income statement for all of that. They give you an operating income, and then they just add in whatever net income is associated with the discontinued operations, because that's still profit that they're earning in this period, but it's not going to continue going forward because they've kind of ended that segment. Okay, so you can explicitly see how much of the total 3M's net income is from this discontinued operation. So what you would do as an analyst is basically subtract that, right? You now know of this amount, how much of it is from this part of the business that's not going to exist going forward. So you can more easily make an adjustment in your analysis. Okay. And if they hadn't done that, then you would have had to guess. You would have had to kind of use some estimate of how much of this was from some discontinued thing, because they probably have announced at some point, hey, we're selling off this part of our business or we're shutting it down. But they're making it explicit in the financial statements of how much net income is coming from that segment of the business that's now no longer going to continue. Okay, so this is just kind of general information for you to know that companies will explicitly tell you how much of their profit is coming from something that's not going to continue going forward. Now, the rest of this you can use in your analysis because it's from the continuing operations. So all these numbers are from just the part of the business that will be moving forward. Okay, so it's set up in a way to make your analysis as a financial statement reader a little easier. They also do something nice where they have the total earnings per share, but they've broken it out between how much of it is from continuing operations versus how much of it is from the stuff that is in the current financial statements but won't be in the future ones. Okay, so again, this will help you be like, okay, well, this is really the earnings per share that I need to consider on a going forward basis.